Okay, picture this, right? It's 2 a.m. on a Sunday, you're scrolling through your phone, and you decide you want to buy some Apple stock. Normally, you're out of luck.
Right? But what if I told you there's actually a way to do this now? Now, not through your traditional broker, but straight through the blockchain.
And we're not just talking about buying a full share either. You could start with literally just a few bucks. Sounds kind of wild, doesn't it? Well, welcome to the world of tokenized stocks, and honestly, it's starting to flip the script on how we think about investing. What's up, everyone? So in today's video, we're diving into something that's been making waves in both the crypto and finance worlds, tokenized stocks. We're talking about real companies like Apple, Tesla, getting turned into blockchain tokens that you can trade. Now, I know that might sound a bit confusing at first, so we're going to break down exactly what this means, how the whole thing actually works, why companies are even doing this in the first place, and at least because nothing's perfect, Deli, what kind of risks you need to be aware of before jumping in. Let's get into it. All right, so first things first, Charmaine, what does it even mean when something gets tokenized? Basically, tokenization is when you take a real-world asset, case could be a stock, real estate, and you represent it with a digital token on a blockchain. So instead of holding a traditional share certificate or having shares sitting in your brokerage account, you've got this blockchain-based token that's linked to the value of that asset. Think of it like this. The real asset still exists somewhere in the traditional financial system.
But now there's a digital twin of it living on the blockchain that you can actually own and trade. There's usually a platform or company that goes out and buys actual real shares of whatever stock we're talking about, let's say Apple.
They work with a regulated partner to hold those shares properly and legally. Then they create blockchain tokens that mirror those shares. So for every real Apple share they're holding, there's a corresponding token on the blockchain. Now here's where it gets interesting, Ted. When Apple's stock price moves up or down in the real market, the token price is designed to move with it. The cool part? You can trade these tokens using crypto wallets, sometimes literally 24/7, no waiting for market hours. And you can often buy fractional amounts too. So if you only want to put in like 20 bucks, you can grab a tiny piece of a share instead of having to buy a full one. Okay, so why does this even matter? Why are people excited about this? Well, this is basically building a bridge between traditional finance, the old school stock market stuff, and DeFi, which is decentralized finance. Think about someone living in a country where it's really hard to open a US brokerage account, or maybe they don't have access to traditional stock markets at all. With tokenized stocks, they could potentially get exposure to these assets in a way that just wasn't possible before. Plus, because these are blockchain tokens, they can interact with smart contracts and other blockchain applications. You could potentially use your tokenized Tesla shares as collateral in a DeFi protocol, or do all sorts of things that traditional stocks just can't do. Now here's something super important that a lot of people don't realize at first. When you buy a tokenized stock, you often don't directly own the actual share in your name like you would with a traditional broker. So there's this intermediary layer, and the platform is holding the actual stock, and you're holding a token that represents a claim to it. What does that mean for you? Well, it means the platform's reliability really, really matters. If something happens to that platform, if they go bankrupt, if they get hacked, if they shut down, that's a risk you're taking on. You're trusting them to maintain that connection between your token and the real asset. Let's talk regulations for a second, because this is